Ladies and gentlemen, you have been connected to the Max India Limited Q3 and 9 months FY22 earnings conference call. Please stay connected. This conference will start shortly. Participants, you're connected to the Max India Limited conference call. Please stay connected. This conference will start shortly. Thank you. Ladies and gentlemen, good day and welcome to Max India Limited Q3 and 9 months FY22 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risk and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajit Mehta, Managing Director, Max India Limited. Thank you, and over to you, sir.
Thank you very much. Good afternoon, everybody. On behalf of Max India, welcome to this earnings call. I hope all of you and your loved ones are safe in this current situation. For the benefit of audiences who are joining the earnings call for the first time, let me introduce, I have with me my colleague Ajay Agarwal, who is the CFO for the company, Mr. Vaibhav Poddar, who is the CEO for Antara Assisted Care Services, and Ujasvi Ghoshal, who is the CFO for Antara Assisted Care Services. I would just like to give a quick overview of the company, followed by the financial performance, for the quarter. As I have said in the earlier calls, Max India's aspiration is to make an integrated care ecosystem for seniors, and we had spotted the opportunity like many other opportunities we had done in the past. So we spotted life insurance way back in 2000, healthcare in 2002. Similarly, we spotted the senior care opportunity in 2010, and since then have been working hard to make sure that we're able to carve a niche out of it. At this point of time, we are the only brand in India creating an integrated care ecosystem for seniors. In terms of market size, it's already a 10 to 12 billion market with value pools around residences for seniors, assisted living, care at home services, and medical equipment. And Antara and Max are quite uniquely placed to take advantage of the opportunity given our background in healthcare, infrastructure, hospitality, because we do need to bring all these competencies to be able to provide an integrated care ecosystem for seniors. Antara is focusing on 4 million customers in the income segment of 15 lakhs per annum and above across 3 clusters of North, West, and South. We are already present in NCR, and we will also look at the West and South cluster going forward. There are 4 value pools that we have selected to focus on. The first one is residences for seniors, which is accommodation meant for people who are relatively healthy but want to live in a safe, secure, hassle-free community. They can choose residences like in Dehradun or in Noida or going forward in many other locations that we'll open up. But if there are seniors who have age-related issues and need help in their daily chores like feeding, bathing, mobility, medication, monitoring, or have gone through a very intense medical episode like a cardiac bypass surgery or a transplant and need rehabilitation, or have memory-related issues, for them the vertical is care homes. And then we also have care at home in case seniors require services in the convenience and in the comfortable environment of their home, whether it's to do with diagnostics, X-ray, physiotherapy, critical care. We also offer care at home. And medical equipment, which is more in terms of bathroom accessories, orthotic aids, respiratory aids, helping them aid their recovery. This is how we are creating the integrated care ecosystem for seniors. So every need that they have, depending on their lifestyle, depending on their personal health situation, depending on their age, we're able to provide them products and services within our ecosystem. So we had commenced our journey, as some of you know, way back in 2013 when the first community in Dehradun, was set up. And since then, that project has done extremely well. In that project, we had bought the land, constructed it, developed it, sold, and also operating the facility. It gives me immense pleasure to share with you that 86% of Dehradun inventory has already been sold, and inception till date we have collected about 486 crores till the end of December 2021. The sales velocity has gone up phenomenally on a quarter-on-quarter basis. We have achieved a monthly sales velocity of 4 units and a collection of 12 crores in Q3. The project debt has been reduced to 18 crores. It's further come down in the month of January, but I'm quoting to you the audited numbers, for Q3. And a very high resident satisfaction score of 90%. 44% in fact of our additional sales are through resident referrals, which is a great testimony both to the brand and the quality of services that we've been providing, to our seniors. In fact, the pandemic has, if anything, accentuated the need for such safe and secure communities for seniors so that they can, live in peace. And the same is being reflected in our sales and collection performance. From Dehradun, all the learnings were leveraged to launch a second community in Noida, which was done in Jan 2020. That's a development model where we have a partner who's contributed the land, and the SPV will take debt. But the design facilitation, the construction, and the operation will be with Antara. It's a very healthy IRR. Since launch, we have already sold 63% of this inventory. This facility is in a very marquee sports sector of Noida, Sector 150. It has many, reputed players like Tata, ATS, Godrej also in the same sector. Despite that, we have been maintaining a very, very healthy sales velocity, which again goes to, talk about the services and the brand that we have built. Currently, phase 1 has been launched. As I said, about 63% of the inventory is gone, and we've collected about 66 crores rupees in Q3 FY22 and achieved a monthly sales velocity of 6 units and a collection of 5.3 in Q3 FY22. Noida, of course, as I said earlier, is a different format. It's more affordable as compared to Dehradun, both in terms of the capital outlay as well as the monthly maintenance. The other advantage in Noida is, given our success, we have been selectively increasing prices every year, which helps the IRR. And going forward, we would like to replicate this model of focusing on our core competencies of designing, sales, marketing, and operating the facility as we expand beyond NCR. The success both of Dehradun and Noida is now giving us the confidence to scale up and look at, geographies outside NCR, and we'll share those details as and when we do that. The second big bet we took on the value pools of integrated senior care platform was through Antara Assisted Care Services. This comprises, as I said earlier, care homes, care at home, and Medcare product verticals. We launched these in April 2020. So far, we have served in 9 months, about 5,000 patients. We have launched 2 care homes with 70 beds, 10 beds for memory care, 16 products and services in care at home, which are critical care, physiotherapy, diagnostics, nursing, patient caregiver, etc. We have also launched India's first mobile health checkup van. It's a van which is fully fitted out. It has an X-ray facility with the necessary radiation, precautionary measures. TMT, ECG, doctor consult, lab, blood work, all can be done through the van near the senior's, house without the senior having to go, for executive health checkup. In the current circumstances, this is even more relevant. On the medical equipment side, we have launched about 1,000 products, 3,000 SKUs, a very robust back end in terms of inventory management, warehousing, logistics. Also fundamentals, of the clinical, non-clinical processes for all the verticals are in place. Happy to report we're the youngest organization to receive a QAI certification for our care at home vertical. This is similar to, for example, NABS just for hospitals. So they have certified, all our processes in the vertical of care at home and find it good enough for the certification. Again, a great vindication of the fundamentals that we have put in place from a customer perspective. Also in the 3 verticals, our customer satisfaction scores have been consistently above 80%, and for December, they were as high as 90%. In the last 2 years, the sector has also seen many new entrants, PE firms, private sector firms, heightened investor interest, which augurs very well from a market expansion standpoint. In the end, I will say in terms of our vision, we are well on our way of becoming a loved and trusted brand, catering to life care, lifestyle, wellness, and care needs, for seniors. Shifting to quick highlights for our consolidated financial performance for Q3 and 9 months FY22. The company during the third quarter of FY22 reported a revenue of 43 crores against rupees 34 crores during the same period of FY21, which is a 25% year-on-year growth. We have also witnessed a growth on the back of higher lease registration possession in Dehradun. Our Q3 FY22 EBITDA loss reduced by 83% to 0.7 crores in Q3 from 4.4 crores in Q3 FY21. Our PAT loss reduced by 56% to 5.7 crores as compared to 13 crores same period last year. Now looking at a 9-month performance, our revenue has increased by 98% It's gone up to 186 crores versus 94 crores 9 months last year. EBITDA has now turned positive to 1.4 crores from a loss of 22.5 crores registered in 9 months of FY21. Similarly, our PAT loss reduced by 62% to rupees 16.5 crores in 9 months from 43.6 crores in 9 months. Again, the numbers are a great, vindication of all that I've been saying in terms of our strategy, in terms of what we are doing. And the company continues to maintain a very, very robust balance sheet position with a consolidated net worth of 638 crores. So we have enough treasury corpus of 378 crores and other assets of about 160 crores to support both capital reduction of 92 crores and Antara's growth aspirations. In terms of the assisted care segments, which I'll repeat are care home, care at home, and medical equipment, the revenue has risen by 256% on a year-on-year basis from 0.28 to 1 crore in Q3 FY22. The occupancy has gone up very sharply from 350 in Q3 FY21 to 1533 in Q3 FY22. Revenues from care at home have also witnessed a 27% increase, and in the Medcare segment by 203%. Just to summarize, our endeavor is to achieve higher growth by having a sharp focus on all the 4 verticals mentioned above. Antara has outlined a 5-year vision wherein the company plans to invest rupees 300 crores across all verticals. As stated earlier, we have enough liquidity in the balance sheet to fund the growth. In the residences segment, our strategy is enter, expand, and excel. We like to enter a particular geography, expand our outreach, and excel in our operations to deliver best-in-class services to our seniors. In the care home segment, the emphasis is on increasing occupancy, increasing scale, and exploring other variants of short stay and low-cost offerings for care at homes to expand the different products that we already have and create differentiation. And Medicare is poised to grow on the back of industry tailwinds and Antara brand, which has synergistic businesses. Antara aspires to be a multi-location company over the next 5 to 6 years with 5 to 7 communities under residences, 35 to 40 care homes, memory care homes, a very robust care at home and medical equipment business, thereby achieving perhaps in 4 to 5 years, so 5 to 6 years from now, a revenue of around 400 to 450 crores for the Antara assisted care business. So in summary, we're all set, having taken a very early bet, having learned, leveraging the learnings now to expand in the 10 to 12 billion sector and creating an integrated care ecosystem for seniors. We are the only ones attempting to do so. There's nobody else. Everybody else is playing part of the value chain. Nobody's getting the entire value chain. We are the only ones doing it. Just to give you an example, for example, in Dehradun, we are seeing synergies now because as the residents age, their healthcare needs are going up, and the healthcare services are now being provided by Antara assisted services. So wherever we set up communities, the healthcare services will continue to be run by Antara assisted care. There are sometimes many people who come into our care homes who want a long stay option, therefore they look at residences. The synergies are also playing out in terms of infrastructure, technology, and staff. Therefore, we are quite convinced of the bet we have taken, and we are well on our way of becoming, a loved and trusted brand. We remain committed to offer an exit opportunity to shareholders who desire to do so through a capital reduction process. The process is well in its way. In time, will get completed by the end of this financial year, as we had promised. At this point of time, we have enough liquidity to support the capital reduction and the growth strategy, for Antara. And the capital for reduction has been also allocated. So once again, thank you, ladies and gentlemen, for joining the call. I'll stop here and welcome any questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Chaitanya Deepak Shah from Silverlight Capital. Please go ahead.
Hi, sir. Good afternoon.
Good afternoon.
So my first question is regarding the 9-month result that I'm seeing here. In the segment revenue, we have 141 crores from senior living. Could you just give a breakup of where this 140 crores is coming from?
Hello, this is Ajay. So the 141, out of 141, the majority money is coming from residences, because last year has seen, the 9 months has seen unprecedented sales and collection, what Rajat sir just explained. And so a lot of registries and a lot of possessions have happened. So approximately 120 crores have come from the financial lease income, and rest has come from the operational income, the non-ACB revenue, and revenues from Antara Assisted Care and the care homes.
Okay, all right. So I just wanted to understand the operating profit in terms of senior living has been shown as around 11.6 crores. So just want to understand if majority of your revenue has come from sale of lease, then why is the operating profit so low?
You are talking about the consolidated results?
Yeah.
So what is happening? There are 3 arms. So there is a Antara Senior Living Limited, which is a corporate division which takes care of the admin expenses. Antara Purukul Senior Living Limited is a subsidiary of Max India, which is recognizing all these finance lease income. So there the profit is approximately 19 crores, approximately 12 crores, against which there is a loss which is happening in Antara Senior because of the corporate cost sitting on Antara Senior. Plus there is a ops loss which is happening at Antara Assisted Care, being a startup company and just started businesses and all that. And that's why the profit of Antara Purukul gets set off against these expenses. In this is added the Max India profit to make the consolidated number. I can share the respective details when it's required.
Sure, I'll take that offline. My second question is regarding the Noida project that we have. I just wanted to understand the basic project finance for this project. In one of the presentations, I read that the total cost of this project, including the land, is going to be around 330 crores. Could you just share a brief on how this is going to be funded?
Out of 330 crores, 40 crores is approximately the loan amount we are anticipating. With certain conservatism and bringing some scenarios in place, we have built in a 60 crore rupee loan against it. So we already have a term sheet in place. We'll disclose it once we have the final sign-off done. So the 60 crores will going to come from loan for construction finance, and rest everything is going to come from collections from advance from customers. Antara as a capital has funded approximately 40 crores towards the payment of the land, and balance will come from advance from customers.
Okay, and if I understand it correctly, this project is being done by the SPV called Content Builders, right?
We are developing this in the SPV, while all the controls and rights and responsibility belongs to Antara. Content is only a landowning company.
Okay, because the reason I'm asking this is in the annual report I saw that Max India controls 62.5% of Content Builders, but it is still classified as a JV. And I just wanted to understand, why are these numbers not consolidated in Max India itself?
Correct. I'll explain. Because from a statutory perspective, it is not a subsidiary. It is an associate only because we are not holding majority shares of this company. While as per the arrangement of our DM, 62.5% of the net profit would belong to Antara, and 37.5% will go to the landowner, which is content owners. So as per the Indian accounting standards, you have to show it as a 62.5% associate, and that's why only the line item has to be merged, and that's what we are doing.
Okay, so the amount of equity that we put in this project is just 40 crores, right? If I understand correctly, Max India as an entity.
28 crores has been put by Max India, in which we have put in, presently we have put in 23.85, while the remaining is already committed to them once they required it. The balance 12 crores was put in by the original landowners. So total 40 crore equity in the company, of which 28 crore rupees has been put in by Antara and balanced by them. Our equity has gone in the form of an ICD only, because in the corporate structure we do not have subscribed for the shares, so it has gone in the form of promoters' contribution, but not as an equity capital subscription.
Okay, all right, thank you. I had one more question regarding one of the related parties in the annual report that I saw. It's called iCare Health Project. And I read that we've put a 60 crore security deposit for development rights. So just wanted to understand what this is exactly.
Yeah. So that's a great parcel of land in Greater Noida where we thought we could develop memory care facilities, a care home facility. It already has a hospital in the campus and a nursing hostel as well. So we had, the land was coming very cheap compared to the circle rate, compared to the market rate, in Greater Noida. So that's a upfront investment we had put in. And we are waiting to see how the market develops. And then we will take a call on how to develop that parcel of land.
All right. Okay. Can I ask another question? I have a few more questions. I can come back in the queue.
Yeah, why don't you come back? Let some others also ask.
Thank you
so much.
Sure, thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Devendra Pandey from DP Financial and Services. Please go ahead.
Thank you. Good evening, sir. And
good evening.
All of you are safe. Sir, I have 2-3 questions. So my first question is on the industry side, sir. So what is the total industry size of senior care industry, including assisted care? And is this 12 billion opportunity only for residences, or it includes segments like care homes, care at homes, etc.?
The total market size at this point of time is about $10 to $12 billion. It comprises of, all the verticals of residences for seniors, from a medical equipment.
Okay, got it. And who are the major players present in residences for seniors and assisted care service business? And where Antara stands and present in terms of market share in that space?
Yeah. Residences for seniors has many players, but in different formats. So there is, Ashiana in affordable, format. There is Primus Mantri, in Bangalore. There is Columbia Pacific Holdings in Bangalore. On assisted care, there isn't any big player actually at all. There are very small 1 or 2 assisted care home kind of operators. Therefore, as I said earlier, Antara is the only branded player through, a Max Group company, which is now wanting to, look at the integrated care ecosystem play. Nobody else is doing it.
Understood. And sir, can you give separate market size for assisted care services like care at homes, care homes, and Medcare, etc.? And what do you see? What will be the potential opportunity for this segment?
Sure. So assisted care is about $1.1 billion. The care home is about $3 billion. Medical equipment is about $1 billion or so. This was a 2019 estimate done by McKinsey for us. If you look at the overall macro picture of India, the age profile is going up. Today we have about 8% seniors, going up to 12% and eventually 20% by 2050, from 120 million to 330 million. Life expectancy has gone up. The disease burden has gone up. 40% of our seniors are now reporting cardiac issues. 17% are reporting dementia. A large proportion are now staying alone without a caregiver. So if you look at, the entire, demand side, there's a huge, need for senior care operators to come in. On the supply side, in the last few years, we have seen increased activity. So besides Max, we have seen Columbia Pacific Holdings in Bangalore come into residences segment. We are seeing, Epoch and Imoha on the memory care and the daycare side. There are some investments made by some, companies as well. Healthcare at home has just bought Suvitas. So we're seeing a lot of activity, in this space, leading us to believe that in the next 7 years, this is a sector to watch out for.
So any estimates how much would be the industry size in next 5 to 7 years due to the drivers we just mentioned?
Well, as I said, currently in 2019, the estimate was $10 to $12 billion, right, which is large enough, for the industry. There aren't very many players, playing in any case. So it's a huge market size at this point of time.
Got it, sir. That would be all from my side. Thank you.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Priyanka Singh from Atidhan Securities. Please go ahead.
Yeah, hi sir. Good afternoon. So I have a couple of questions. Firstly, so basically, currently, 75 to 80% of our Concall revenues is from residences businesses, and just 7 to 8% is from assisted care. So can you guide us on the long-term revenue mix for these businesses?
Yeah, in the next 5 to 7 years, you'll see a 50-50 mix.
Okay. And what kind of revenues are we targeting from residences for seniors and assisted care services in next 3 to 5 years? And again, which segment in assisted care services will be the main revenue driver in the coming years?
So in Tara Assisted Care, as we have said, all these are directional numbers. The pandemic has changed a lot, so let's give you directional numbers. So our aspiration is to look at 400 to 500 crores revenue only through Antara Assisted Care, comprising of care homes, which is our North Star, and then care at home and medical equipment. On the residences, the revenue really is dependent on, projects that we do, right? So that is what...
400 crore rupees on a 4-year time frame. So
yeah,
100 crores.
about 400 crores again in the next 3 to 5 years.
Okay. And lastly, how many units are unsold at Dehradun currently, and when can we expect the complete sale of this community?
We only have about 25, 26 units now left in Dehradun, and hopefully in the next 12 months, we should be able to sell the entire inventory.
Okay. That's all from my side. Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Isha Savla from Arya Securities. Please go ahead.
Thank you for the opportunity, sir. I have a couple of questions. Considering the monthly sales velocity of 6 units for Noida Phase 1 property, can we expect complete sale of these 340 units in next 6 to 7 quarters?
Yes, absolutely.
Okay. And sir, our volume in care at homes business have been declining sequentially since Q1 22. We understand that Q1 FY22 volumes were good because of the COVID second wave. Now, what kind of quarterly volume run rate and contribution margin we can expect in this segment?
As you rightly mentioned, the Q1 revenues had peaked because of the COVID pandemic. And Q2, Q3, what we are seeing is that in the hospitals, right, the elective surgeries as well as the medical tourism, both domestic and international, continues to be very low. International flights are opened very selectively for patients. And that is why we see that the tourism market, which is a significant demand for care at home also because they need pre- and post-surgical support, that has been reduced. And also because of the pandemic, a lot of people are avoiding having caregivers come in and out of their homes. So majority of the demand that we are seeing is for 24-hour support in homes. But the 12-hour support, which is usually the larger part of the market, is still recovering from the post-pandemic fear.
Okay, sir. And so in the investor presentation, you have mentioned that occupancy rate at Delhi's care home was just 14% during the last quarter. And Gurgaon's care home occupancy at 36% is also not very high. So can you share what was the peak occupancy rates we have seen in these care homes and what kind of occupancy rate we can expect going ahead? Like also by when we can expect EBITDA positive for care home segment?
Sure. So first thing, as already mentioned, care homes is a new segment that we are entering into. And that is why the ability to create awareness of these facilities is equally a time-taking thing. Right? So we've seen continuously 2 benefits. Right? One is that the occupancy has gone up, inching up every time, that every quarter that we are spending. And also the ALOS or the patients who are staying with us has gone up significantly from around 14 days to 25 days now. So I think the proposition seems to be strong and working. We are expecting that individually the care homes will break even once they hit around 45 to 50% occupancy.
Okay, sir. So last question on balance sheet side, like what is the total gross debt and cash equivalent position as on 31st December?
Gross cash and cash equivalent.
Gross debt in cash and cash equivalent.
I'll have to check that. Gross cash and cash equivalent, very happy. I'll share this with separately.
No problem, sir. So that's all from my side. Thank you.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Chaitanya Deepak Shah from Silverlight Capital. Please go ahead.
Hi, thanks for giving me a chance again. So my question is for Vaibhav. This is regarding the assisted care homes that we've started running. Now, I just wanted to understand what competitive advantage do we have vis-a-vis a hospital starting this themselves. Because I'm assuming they have the doctors and nurses and they would be able to sweat their assets much better than us, right? So, I mean, from a long-term view, how competitive are we vis-a-vis hospitals?
Sure. So I think principally what we have to understand is that care homes versus hospitals, they are principally very different things, right? A care home is more a home which also has medical facilities imbibed into it, right? So for any patient who is under active treatment, right, would obviously be in a hospital. But once a patient comes out of a hospital and is not in an active treatment and just need care and support and can't live his or her life very independently, then they move into something which is known as care homes. So care homes is not if somebody has to be in an ICU or somebody has to undergo an active treatment, they would obviously prefer in a hospital. But if somebody is unable to support themselves at home or are 70, 75 plus and are staying alone and can't manage the home themselves, they will not want to check into a hospital. They would rather stay in a care home. And our homes, as I already mentioned, are more focused on providing a home-like environment while ensuring that all the medical facilities for care perspective is given to them. So we do not treat any patient in our care home. So if somebody falls ill or somebody, they don't come into a care home for treatment. So for any treatment, they will go to a hospital, but for care and comfort, they will check into the care homes.
Okay, so do you expect hospitals to get into this segment in the future? I mean, because it seems like it would be synergistic for them to get into something like this.
So if you look at it only from one perspective, which is they have hospitals and nurses, then that's an extension. But if you really see, the principle on how they work versus how care home works is very, very distinct. Here the customers are long stay, right? The focus on hospitality and care is very important. While in a hospital, the mindset is very focused on treatment, and most of the big hospitals will actually reduce the stay of the patient within them. Because the way a hospital makes money is through surgery and interventions. They do not make money if a patient stays with them for long term. And this difference in mindset of how a hospital makes money versus how a care home makes money is very distinct. So it's not something just because they have nurses and doctors, it's not an ideal extension for them. And even globally, if you see, there's not a single hospital chain which runs care homes themselves.
Okay, that's really good to know. And how many homes should we expect in the next financial year, if you have any sort of estimate that you're working on?
So currently we have around 70 beds and we are looking to reach around 200 beds by end of FY23.
Okay, all right. Thank you. And I just have one more question, and this would be for Rajit. This is regarding the Max Bupa sale that we made a couple of years ago. I mean, I just wanted to understand, I mean, I was just seeing the numbers. We were 1/6 of Star Health insurance at that time when the sale happened. And the sale was made for an enterprise value of, I think, 1,000 crores. Now today, Star Health is valued at 45,000 crores. So, I've been a shareholder of Max since years, and as a shareholder, I just feel that maybe we might have made a big mistake because the valuation gap is too big right now. I mean, would you like to comment on this?
You're talking about valuation of Star Health, not Niva Bupa, right?
Yeah, I'm talking about Bupa comparing it to Star, because we sold it for 1,000 crores valuation.
So Chaitanya, it's an apple and orange comparison. Very different circumstances, very different build-outs. And therefore, we had promised, our shareholders at that time also that for those who want to exit, we'll give a very reasonable price of rupees 85 per share for capital reduction. So we had made that offer, very clearly to our shareholders. So very different comparison, Chaitanya. Maybe we can take it offline. Since I also come from the insurance sector, it's an apples to orange comparison actually.
Sure, I would really like to connect with you offline and understand the rationale for this.
Sure.
Yeah, thank you so much.
Yeah.
Thank you. The next question is from the line of Anant from Newport Capital. Please go ahead.
Hi, good evening. Can you hear me?
Yes, please.
Yeah. So a few questions on care homes, because I think that seems to be the segment which is going to drive growth over the next 5 to 7 years. So if I understand this correctly, you mentioned earlier that you're targeting 35 to 40 care homes over the next 5 to 7 years, and revenue to be assisted care revenue would be equivalent to your residence living revenue. So I just want to understand how easy is it to set up a care home, or how the build out will go through, say, in F23, F24, because doesn't this involve like acquisition of land, making the whole care home, equipping it? So I don't understand how easy it is going to be to suddenly go from 2 to like 35 to 40 in the next 5 to 7 years. Can you just elaborate on that?
Great question. So first of all, 35-40 means about 1,500 beds or so. And these are all asset-light models. So we don't buy a single care home. These are built-out properties already lying there. We just take them on lease and operate them. In some cases, we have taken the full property, and now we are soon experimenting with taking out part of the property only, and then take more as the occupancy builds up, right? So the only money we spend is on putting in safety features like anti-skid tiles, wheelchair access, grab bars, nursing stations, emergency call buttons, the physiotherapy unit. So we don't buy the land and build it out. They're all built out properties like, for example, guest houses, OYO townhouses, which we take on rent, refurbish them, and start operating. And if you look at the new model we have now just come up with in the month of January, which is taking part of the property, that is, imminently scalable. So as Weber pointed out, we already have 70 beds. We'll soon go up to 200 in the next 12 months. So therefore, expansion to 1,500 is not an issue. These are not bought properties.
Understand. So 70 to 200 in a year, you're saying, because these properties are already there, it's a question of negotiating the deal and then refurbishing a little bit and getting started on this. So,
correct. And of course, there are compliances to be taken care of, fire, etc. That also, but yeah.
Understand. So now coming back to the break-even of, say, suppose you acquire a property. Now you have two properties and the occupancy rate currently is 14 and 35 or 4%. And you said 45%, 50% plus is going to be the break-even. So how long does it take for you to go from starting off or launching to like reaching a 45 to 50%? On an average, what do you think it would play out as?
About 24 months or so. Yeah, or 24 months. But remember, in the last 20 months where we have been up and running, about 10 months has been pandemic disruption. Right, so we haven't had any international, patient. Domestic outpatient patients have been limited. Access to hospitals has been limited. So despite that, we are able to see a 36% occupancy, in Gurgaon. But normally, in a normal circumstance, within 24 months, we should see a 50% occupancy and a break-even in the first 24 months of any care home. And by the way, despite all the issues, we are able to see that both for Gurgaon and GK, the trend line is visible to us.
Right. So you're actually happy with the occupancy rate that you're showing currently?
Because not happy, but in the circumstances that we have no choice. And we also did a optimization of costs, and therefore instead of a 60%, 70% occupancy break-even, it's come down to 45-50% now.
Understand. No, what I wanted to emphasize was you're saying in spite of the pandemic, if these are the numbers that you've shown, then as shareholders, you're saying that this is a number which you should be content with rather than pointing out that this is a low number. Because as it is, if we come across, it looks like low, but we have to put that in the context of the pandemic. That seems to be what you're trying to explain.
Yeah, that is. Secondly, in terms of our base model assumptions of breaking even the first 24 months, that we are able to see.
Right.
And just to add in this, it's important that the building blocks are all in place. We have to move forward with our growth because this is COVID is going to stay. So now things are, as you see the first wave, the intensity thereof, the second intensity and third intensity, the intensity is shallowing down, and so we have to be absolutely ready. Once this comes as a business as usual, at that time when people start coming back to the form which they were earlier pre-COVID, we should be absolutely ready to capture that opportunity.
And as Davo also said earlier, this is a category creation job as well. It's not an intuitive category in India as yet, unlike the Western world where assisted living is well known and accepted.
Correct. No, great point. Great point. You said that it is sort of not very intuitive in India. So I just want to understand what is the profile of your clients at care homes? Is it like the middle class, upper middle class, rich? Who are the kind of people who are your clients at care homes?
Yeah. So normally these are people who are 70 plus, who are facing aging related issues or need rehabilitation after an intense medical episode. They are able to afford a 4,000 to 5,000 or 1.5 lakh kind of ticket size per month. But please remember, this is all inclusive. They get boarding, lodging, nursing, access to physiotherapy, diagnostics, engagement activities all thrown in. So we did a comparison to what would it cost a senior to stay at home and engage a nurse for 24 hours. This is actually a cheaper option for them. So our target segment is household incomes of 15 lakh per annum and above. And we are seeing a profile of patients who are 70 plus, who don't have their kith and kin around them, mostly, who are, becoming customers to us.
For short stay,
and, for short stay, it's a different price point. That's a little, about 4,500 or 4,000 per day. And that's purely for 1 week, 2 weeks, 3 weeks post or pre-surgery.
Understood. Just one last thing. So as you said, 15 lakh rupees per annum seems to be the target segment. But so these guys are typically the kids are abroad or kids are in a different city. Is that the setup that you're seeing in the families?
Mostly.
Understand. Okay, perfect. I think that answers most of my questions. Thank you so much.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Keshav Garg from CCIPL. Please go ahead.
Sir, just wanted to get an idea that for the next financial year, FY23, what kind of top line can shareholders expect, and with some idea on the margin also? Thank you very much.
Keshav, very difficult for us to give projections. We are in the process of, finalizing our business plans. This is the month of January. And by March, we should be done. Maybe the next call we'll be able to give you a flavor.
Okay, sir. Thank you very much.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Rajit Mehta for closing comments.
So thank you very much for an engaging, call. Great questions asked. As I said, I'll reiterate just 2 or 3 points. One, Antara is the only company in India trying to create an integrated ecosystem for seniors for all the needs that they have. We have, competencies under one umbrella, given our background in insurance, healthcare, infrastructure, hospitality, to be able to create this and differentiate ourselves. The last, few months have been a great, vindication to what we have built as a brand, as a product, as a service and reputation, both for residences for seniors, where we are seeing increased velocity, as well as the initial success we are seeing in the build-out of Antara Assisted Care. All the building blocks in terms of clinical processes, non-clinical processes, products and services, team, are fundamentally in place, and you can see the validation in terms of trajectory as well as the certification that we got for our care at home services and the customer satisfaction scores. So I would say we are in a good place as of now, need to now press the button on scaling up, as we go forward. So thank you very much. Keep safe and all the best.
Thank you. Ladies and gentlemen, on behalf of Max India Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
Suresh, you need to unmute yourself.